In this video, I speak with Mike Todd from IRA Innovations about how to use an existing 401k for alternative investments like real estate or real estate mortgages. I put Mike's contact at the end of the video as well as in the description below. We also kept this interview short because in my opinion, it's not the most interesting thing to talk about, but it is vitally important to the wealth of your future. Mike, thank you for coming down here. I very much appreciate it. You drove to the depths of Spring Hill to come hang out with me at my little podcast studio guest house here. Tell people who you are and what IRA Innovations is.
Sure. My name is Mike Todd. I'm the president of IRA Innovations. We are a retirement plan administrator that specializes in allowing clients to invest in alternative investments inside of an IRA. We use the term self-directed IRA to describe that.
Got it. Selfishly, the reason that you're here is because Nashville Money Guys, which is who I'm with, we use people's self-directed IRA money to fund some of the real estate deals that we're involved with. So that's the reason that I wanted you to come down today. So yeah, I know that you knew, but I got to plug Nashville Money Guys before we get too deep in. So the second question that I had was, what are the advantages of a self-directed IRA and what types of investments are you typically seeing your clients making using them? So most people know what a 401k is. And this one I think can be a little bit of a longer answer because this is where people, when I tried to tell them what a self-directed IRA is, they have no idea that this world exists. So take your time on this answer.
Sure. So that's an excellent point. Most people don't know, and we've been in business around 20 years now, coming up on 20 years, and people even in our local market still are not familiar with the term self-directed IRA. But the advantage is really it opens the door for people to invest in things maybe they understand better or feel more secure about. So at the end of the day, it's still an IRA. So whatever, if it's a traditional IRA or a Roth IRA, your normal rules still apply as far as contribution limits, distributions, retirement age. That is no different whatsoever. The difference becomes what the investment is. So like you mentioned with the Nashville Money Guys, we have clients who do loans with you guys. And that's actually what got me started in this space. I had found out 22, 23 years ago about this industry. I'd never heard of it before, even though I was in the financial space.
Yeah.
And my very first investment I did was a loan on an individual's primary residence, and of course it was secured with that property as a collateral. So to me, the advantage for our clients is that it gives them the opportunity, hey, I understand how a loan works much better than I understand how the stock market works. So at my age, it just made me feel a lot more secure.
So primarily when people are kind of stuck in a traditional 401k or it typically is like something that's tied to their employer. Is that correct?
That is correct.
Okay. So the self-directed stuff, I think we can go into the next question, which primarily how are people funding their self-directed Roth IRA with you or their self-directed IRA? It doesn't have to be a Roth.
Sure. So it comes from one of two sources. Either you mentioned 401k. So, hey, I've got a plan with my employer and usually their former employer. So it's a 401k or a 403b or 457, some employers plan. Those funds, if it's with the previous employer, can be rolled over directly into an IRA with us. If it's a current employer, it may or may not can be rolled over. It actually depends on how the employer formed the plan when it's a current employee. The other method of funding is when it's coming from another IRA. So, hey, I've got a traditional IRA at Fidelity or a Roth IRA at Schwab, whatever the account type may be, it doesn't matter. Then it's actually called a transfer and not a rollover, and we can request those funds directly on the client's behalf, and it usually takes about a week to get the funds.
Oh, that's fast then. Okay. So let's back up just a hair because I missed something. We talked about loans,
Sure.
like alternative investments. And we talked about basically primarily what you're investing inside of a traditional 401k is going to be the stock market. And I think that most people kind of have a general like 30,000 foot view on this is what I'm using my 401k for. I'm invested in some mutual funds or whatever you like sat down with the HR manager and they just kind of put you in. What are some other alternative investments that people can use by going self-directed with you?
Sure. So the top three investments we see on a regular basis are real estate. And so when I mention real estate, the IRA itself is listed on the deed as the owner of the property. the second, and sometimes it's actually number one, is the private loans, like with what you guys have experienced with the National Money Guys, that, hey, my IRA is going to make a loan to the National Money Guys who's going to use it to help fund somebody's deal. And then thirdly are privately held companies. There's many, many companies out there that either looking for money partners, not in the form of a loan, but as an equitable position, or maybe they even have privately held stock. And an example would be some of the community banks in the area have stock that is not traded on the stock exchange. So if your IRAs with Raymond James or Fidelity or Schwab, they can't buy that stock, but I can, since it's not on the stock exchange.
That's interesting.
But the law actually, I tell people, the law actually lets you invest in anything you want. The limitations come from the custodian, and all the brokerage firms that I know of out there will limit you to the stock market because that's the space they're in.
Okay. So could I buy a collectible car?
You cannot buy a collectible. So that's a great segue. I said you can really buy anything you can think of.
Sort of. I kind of knew that this was a little bit of a,
Yeah, there's two things the law says you cannot invest in, and that's the only thing it limits you to. That says you cannot buy a collectible, so no art collection, stamp collection, antique car collection, and you cannot purchase a life insurance contract inside of the IRA.
Okay.
And that's the only two exclusions limited by law. So therefore, everything else is permissible. So stocks and mutual funds are permissible because they're not called out directly in the law, but that also means real estate, loans, precious metals, privately held companies.
Oh, so I could buy gold inside the self-directed if I wanted to.
Absolutely.
Because what I'm thinking is if people are doing something with Nashville Money Guys and they're investing in real estate loans with us, and then they decide they want to shift out, they can always go back to the stock market if they wanted to inside of your fund, correct?
That is absolutely correct.
Yeah, so they're not really losing the ability to get in and out of the stock market if that's where they felt more comfortable after they did a loan or two.
That is correct.
Okay, that makes sense.
They're not losing anything, right? It's just that it opens the door to do the other things if that's what they want. That's absolutely correct.
So if somebody is initiating the process, let's say they've left their company, they've got a 401k that's at the old company, and they reach out to you, typically how long, and kind of tell me about the process that it's taking. For me, I hate doing stuff like that. And you probably remember I was a nightmare to deal with, and I'm always a nightmare when it comes to like insurance, all that stuff. I just hate it. If you have a person who is much more responsible than I am, how long is it typically happening from the day they reach out to the day that you're actually like everything's set up and you're active to be able to invest with IRA Innovations?
So on an average, I would say it's going to take 1 to 2 weeks, but it really is kind of dependent on the client's questions. If it's an initial conversation and they engage with me or someone at the office and start asking questions, there may be some correspondence back and forth for 1, 2, 3 days, maybe even a week. But then once they submit their account application to us saying, hey, I'm ready to pull the trigger, here's my account application, and I'm transferring funds from Fidelity, that process usually takes between 7 and 10 business days. And it's not the account opening itself that is slow, it's the transfer of the money because it's a manual process. We have to fax paperwork to Fidelity or Schwab, whoever the other firm is. They usually take 3 to 5 days to process it internal, and then the funds arrive.
So they're not having to go to Fidelity and say, hey, I'm closing my account with you guys. It's being opened at another place. Like that's a confrontation that I imagine some people do.
It is. It can make them uncomfortable. When it's IRA to IRA, we can initiate the movement of funds for our client, and we do. If it's from the employer, if it's still with the 401k, they have to initiate it on their side. We're not allowed to do it when it still resides with the employer.
How often are you seeing people that are at existing jobs, like that they're at their current job and they've got a 401k that's existing with that company? How often are those people able to roll stuff over into self-directed with you guys? We're seeing it very rarely on our end when we're talking.
It is
to folks.
very rare. If I just had to pull a number out of the air, I would guess 25% or less of the firms out there allows current employees to transfer money.
Why?
I think it has somewhat to do, they have a fiduciary responsibility for their employees. And I think part of me thinks that's the reason that, hey, they don't want to somehow, if they let the funds transfer away, and if the investment goes awry, that somehow that could fall back on the employer. I really think the biggest reason, though, is most of the people, when they set up 401ks, work with a third-party administrator that uses templates to design these documents. And I think just by default, the template is, oh, we're not going to let the employee move money away, and nobody ever asked to set it up differently.
That makes sense. That makes sense. Can you tell me like one example of some sort of horror story investment or a trap that people could get into by using self-directed where you would not recommend them? Like we've heard of like checkbook LLCs and all this kind of stuff. Why it's important for them to have you on board as somebody who's basically making sure that they're kind of staying in compliance. So I kind of want to go into that a little bit.
So a couple of examples or cautions I would give prospective investors is, especially when it's property. If it's a piece of real estate where the IRA is going to own a property, you have to be careful of who may be either using the property or doing work on the property or even paying bills associated with the property. So one thing we didn't mention is there's a handful of people the law says the IRA cannot do business with. They're called disqualified persons. It's easy to visualize. If it's Brandon's IRA, the disqualified people are you and your spouse if you're married, straight up and straight down to your family tree. Not your spouse's, but yours.
So my parents and then my children.
That is correct.
Okay.
And then if your children are at the age of being married, their spouses would fall on that list as well.
Okay.
So the challenge is they can't do any business or transaction with the IRA. So in the case of a property, that means these people can't pay expenditures for the property, even temporarily. So we've had situations where clients start putting charges on their credit card related to the property and then come to me and say, Mike, I need you to reimburse me because I know I'm not supposed to pay that, and it's too late for me to reimburse you at that point. You're a disqualified person.
Okay.
Or I paid the property taxes and I know I'm not supposed to. So I would caution people that, hey, if you're not 100% sure, please pick the phone up and give us a call.
But this is stuff that you can also, I'm assuming, have a conversation with them and they can say, here's the type of investment that I'm thinking about making. And you can say, great, sounds good. Here are some things that basically you need to keep in mind as you're doing the transactions.
Absolutely. Yeah. And even in the case of real estate, we now even added a form where the client reads through it to acknowledge that, hey, here are some things to watch out for.
That's great.
So
that's great.
Absolutely.
Yeah, that's the kind of thing. Like I've had plenty of friends who had money in their IRAs and they're like, I could put this money down on a house in Belize and then I could go down and I could use that house on occasion. And you're like, no, dude, that's not the point. You can't do that.
That's exactly right.
You're benefiting personally. And this, viewing your IRA as like a completely separate person from yourself when you're investing and saying, no, I can't, I am a separate person from my IRA.
That's
my
right.
IRA is going to benefit, not me.
That's exactly right.
That makes total sense.
And I remind people, we use the term self-directed IRA. It's still an IRA, right? And your example of the Belize property of, hey, why can't I use it 1 week out of the year or 2 weeks out of the year? And I'm like, well, when you have your IRA at Edward Jones, do you expect to use it 1 week out of the year? And they're like, well, no. I said, well, it doesn't change just because you purchased a piece of property.
You know how it is. People are just always looking for workarounds.
That's exactly right.
Yeah.
They
Mike,
do.
tell people where you are, like how people can get in touch with you.
Sure.
Basically.
We have offices in Nashville and Birmingham, service clients nationwide. My office phone number is 615-794-8961 or via email, mike@irainnovations.com.
Awesome. And I'll put the contact card at the end of the video. Thank you guys for watching. This is Brandon with Nashville Money Guys. Again, if you need any services from Mike, he'll help you out so that you can roll money over into a self-directed IRA or some other version of something you can self-direct, and then you can come do some loans with Nashville Money Guys.
I appreciate it, Brandon.
Absolutely.